For decades, the US dollar has been the undisputed king of global currency, trusted for trade, investments, and savings. It's been the standard for international transactions, the bedrock of global finance. But as we look toward 2025, the future of the dollar is in jeopardy. With the rise of global economic instability, skyrocketing US national debt, and the growing influence of new power centers, the question must be asked, what happens if the US dollar fails? In this video, we're going to explore the shocking possibility of a dollar collapse. We'll investigate the economic conditions that could lead to this catastrophic event, the global consequences, and how you can protect yourself from what might follow. What could a failed dollar mean for you, your money, and the future of the world economy? Stay tuned as we break down everything you need to know about the potential collapse of the US dollar. At the heart of the looming crisis is the US national debt, which has now surpassed a staggering $36.5 trillion. The US government has been borrowing at unsustainable rates for years to finance everything from military expenditures to social programs. But the costs of servicing this debt are spiraling out of control. In fact, interest payments on the national debt now exceed the US defense budget. This should be alarming. As the debt grows, the US government must print more money to meet its obligations. This action causes inflation to rise, and with it, the dollar's purchasing power declines. But there's more at stake here. America's borrowing habits are putting global trust in the dollar at risk. If the US defaults on its debt, or if investors start to lose confidence in the US economy, the fallout would be disastrous, affecting not only America but also the entire world economy. Countries holding US dollars would face massive losses in the value of their reserves. And with the dollar's value under threat, international investors may begin to look elsewhere for safe haven assets, further weakening the dollar. A loss of investor confidence in US treasuries, once seen as one of the safest investments on Earth, could trigger a global financial meltdown. Inflation, a silent killer of the dollar's value, has been on the rise for years. Prices for everyday goods are escalating. Groceries, fuel, housing, you name it, and wages are struggling to keep pace. For many, the dollar's ability to act as a store of value is no longer reliable. This erosion of purchasing power is a clear indicator of the dollar's decline. In 2025, inflation has become a growing concern. The Federal Reserve has tried to counteract rising prices with interest rate hikes, but inflation remains stubbornly high. The dollar's value continues to slip, and many Americans are feeling the pinch in their wallets. The rising cost of living, coupled with stagnant wages, creates an environment ripe for economic unrest. Inflation isn't just a domestic issue, it has global implications. As the US dollar depreciates, other countries and investors begin to lose confidence in the greenback. Foreign governments and businesses may seek alternatives, opting to trade in other currencies. The dollar's grip on global trade weakens, further accelerating the currency's decline. Across the globe, countries are waking up to the risks of relying too heavily on the US dollar. This movement, known as de-dollarization, is gaining momentum, and it's a key factor that could signal the end of the dollar's dominance. China has been at the forefront of this change, forming currency swap agreements with dozens of nations, allowing them to bypass the dollar entirely. Russia, too, has pushed for a world where oil and gas are priced in rubles instead of dollars, breaking away from the dollar-centric trade system. Meanwhile, nations in the Middle East, Latin America, and Africa are increasingly turning to local currencies in their trade agreements. Even some European nations are beginning to explore alternatives to the US dollar, signaling a profound shift in global financial systems. One of the most significant moves comes from the BRICS nations: Brazil, Russia, India, China, and South Africa. These emerging economies are actively seeking to create a new global financial order, one that challenges the dollar's dominance. They're exploring the creation of a new reserve currency, one that could replace the dollar as the primary currency for international trade and global reserves. Even countries that traditionally relied on the dollar, such as India and Turkey, are exploring ways to bypass the greenback in favor of their own currencies. These efforts are slowly but surely eroding the dollar's control over global finance. Let's take a closer look at BRICS and the role these emerging economies play in challenging the dollar. The BRICS nations are creating alternative payment systems and financial structures that don't rely on the US dollar. By promoting the use of their own currencies, they aim to reduce their dependency on the dollar for international trade. China, as the world's second-largest economy, is a key player in this movement. The country has been making aggressive efforts to internationalize the yuan. In fact, China's share of global trade conducted in yuan has increased dramatically, from just 20% a decade ago to 56% today. This shift is crucial, as it signals that the yuan could one day rival the dollar in international transactions. Russia's involvement in the process is also significant. With tensions escalating between Russia and the West, the country has pushed to reduce its reliance on the dollar for oil and gas exports. This move is part of a larger geopolitical strategy to undermine Western financial dominance and to build new alliances in a multipolar world. Emerging economies are increasingly diversifying their reserves, reducing their exposure to U.S. assets, and seeking alternative payment systems. These moves will likely hasten the decline of the dollar's dominance. Now let's consider what could happen if the U.S. dollar were to collapse entirely. While this might seem like a distant possibility, the conditions are aligning in such a way that we could see significant disruption to the dollar system. First, let's talk about the immediate economic consequences. A collapse of the dollar would trigger soaring interest rates, as investors demand higher returns on U.S. bonds to compensate for the perceived risk. This would make it increasingly difficult for businesses and consumers to borrow money, triggering a severe recession. Second, a dollar collapse would lead to widespread inflation. As the U.S. struggles to stabilize its currency, the price of goods would skyrocket, further eroding the purchasing power of everyday Americans. This could cause mass protests and economic instability in countries that rely heavily on imports. Third, the global financial system would go into disarray. Many nations hold U.S. dollars in reserve as a hedge against financial crisis, but if the dollar loses value, these reserves become worthless. Countries would scramble to find new reserves, and the global financial system would have to adjust to a new reality, likely involving a multi-currency world order. So, how can you protect yourself if the U.S. dollar fails? While a dollar collapse is a worst-case scenario, it's always smart to plan ahead for potential economic instability. One of the most effective ways to hedge against a dollar collapse is through diversification. This includes investing in assets like gold, which has historically been a safe haven during times of currency devaluation. Other precious metals like silver and platinum can also offer protection. Cryptocurrencies such as Bitcoin and Ethereum are increasingly being seen as an alternative store of value. Although they remain volatile, they are not controlled by any government or central bank, making them immune to the risks that affect traditional currencies. Real estate, particularly in stable countries, can serve as a solid investment option. By owning property in foreign markets, you can protect yourself from the depreciation of the US dollar and even profit from currency fluctuations. Finally, it's important to keep a portion of your wealth in foreign currencies. Countries like Switzerland, Singapore, and Japan have stable economies and reliable financial systems. Holding foreign assets in these currencies can provide security and help you navigate turbulent financial waters. The future of the US dollar is uncertain, but the risks of a dollar collapse are growing. From rising debt to inflation, geopolitical tensions, and the rise of alternative currencies, the global economic landscape is changing rapidly. But rather than fear the future, we should be proactive. By staying informed, diversifying our investments, and preparing for potential financial shifts, we can protect ourselves and our wealth from the impacts of a potential dollar collapse. As always, the key is diversification. Spread your investments across multiple asset classes, stay informed about economic trends, and make smart financial decisions. If you do this, you'll be well positioned to weather any storm that comes your way. Thanks for watching this video. If you found this information valuable, make sure to like, share, and subscribe for more insights into global finance and economic trends. Stay proactive, stay ahead of the curve, and remember that knowledge is your greatest asset in uncertain times.